Is it finally time to buy some stock in buy Uber? This morning, the stock was down roughly 6% on the news that the ride-sharing company may lose London. Oh, boy, that's a gigantic market for Uber, with 45,000 drivers generating an immense amount of revenue. Why? Because Transport for London, the regulatory body that governs cabs in London, found that 14,000 Uber trips were driven by maybe impersonators. Some of them had no insurance. I mean, it was a nightmare. But wait a second. The company says that 14,000 trips made up less than 1% of the rides they facilitated. There haven't been any recent incidents, so come on. As for the insurance issue, Uber says they've solved that too, so they're going to appeal. Tony West, the general counsel, who is incredibly savvy, will make that case for Uber there. And in the interim, the service will still be available in London pending resolution. But it's not a slam dunk. Like most municipal regulators, Transport for London tends to protect the interests of what's basically amounts to a guild of cab drivers. It's not like New York, where the medallion holders seem to have very little pull. On the other hand, this is by no means an open-shut case, which is why the stock immediately bounced back, closing down just 1.5%. That's it. There's a more important reason why Uber was able to rebound. The lockup on insider selling expired nearly 3 weeks ago. This is one of the largest lockup expirations in history, if not the largest. And now most of these new shares have finally been digested, put away. Former CEO Travis Kalanick has sold nearly $1.5 billion worth of stock so far this month. Nice. You had a lot of people cashing out. But if they're done selling, the stock can rally. I want any good news. Earlier this month, I told you to wade back into Lyft. Since then, the stock's climbed more than 10%. As for Uber, I told you to wait to see how the lockup expiration plays out, and that's now safely in the rearview mirror. Of course, I don't want to get too aggressive. The company itself continues to point out the things that it did wrong. But what we heard from them the last time they reported was a commitment to discipline that puts Uber in sync with well-run, publicly traded companies. It makes it feel a lot less like those overhyped, overpriced venture capital-funded private operations, many of which we saw when we were in San Francisco last week. Specifically, management talked about being willing to get out of losing markets, like their Uber Eats food delivery business that's responsible for a big chunk of the company's losses. For Uber Eats, 15% of their markets accounts for half of the unit's losses. That's incredible. And it suggests that if they simply drop those markets, or if Uber were to sell the whole business to Grubhub, you could see a gigantic jump in the stock. Unfortunately, like everyone else in the delivery business, Uber Eats is being crushed by DoorDash, which seems to have unlimited funding that allows it to endlessly lose money because it's private. If Uber were to combine Eats with Postmates or even Grubhub, taking out a competitor, that might be a big positive, although I'm not sure the market would initially understand what's happening. Longer term, though, if the food delivery business gets rationalized the way the ride-sharing market's been rationalized with lots of dropouts lately, then you'll be able to make an actual investment case for Uber on discounted cash flow or an earnings before taxes, depreciation, and amortization 2021, not 20. It's not too long from now, though, when you think about it. The calendar about to flip. Meanwhile, Uber caught 2 upgrades in the last couple of weeks. One argued the stock could have roughly 90% upside. I was keen on this idea of Uber Eats going over to Grubhub, by the way. I know there's still some skepticism, tremendous skepticism. Hey, I've disliked this from day one. I was only ever really enamored of Uber Freight. The trucking business has made great strides in lower the cost of logistics in this country. Now, though, I think Uber's management is almost done playing defense. The overhang over insider selling is behind them. That's why I am betting the stock can go higher from here, which is why it is time, particularly after that bounce off the London low, to do some buying in the stock of Uber. So stick with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.